Guys, I'm happy to welcome to the podcast a new guest. This is Kim Githler. She's the founder of The Money Show. In fact, Money Show has been going since 1981, and over 40 years, she's been a very influential financial educator with investors, with traders, with financial advisors, with ordinary citizens as well. She's been honored by the New York Stock Exchange. In fact, she's had a chance to ring the closing bell. And Kim, welcome to the podcast. Thanks for joining me. Great to have you. We're living in a little bit of a turbulent and rocky economy, it appears. Talk a little bit about, should we be frightened that our accumulated savings over years or even decades is somehow going to go poof?
Well, Dinesh, first of all, it's an absolute pleasure to be on your program and to be a part of your program. You've done so much work for our community and the U.S. in your books, in your movies, in your commentary. So thank you for having me. It is a distinct pleasure. We have a lot of problems going on. There is no question about that. I've been in this business for 42 years, and I started with Louis Rukeyser. So many, many years ago. And of course, Steve Forbes is also on our platform, as well as Larry Kudlow and many of the phenomenal economists that we all follow. And, we have seen in this Biden economy, first of all, an administration that has no experience in business whatsoever. Their policies have hurt this country dramatically, especially in the fossil fuel area. They should take the fossil fuel issues that we are having, obviously with climate change and some of the issues that they're trying to advance, and do it in a very modulated, careful way. And instead, they're radically making changes that are affecting our consumers today in not a good way, as well as the Federal Reserve has not been a helpful friend to the U.S. economy, in my opinion. They have been overstimulating. They have had low interest rates for a very long time. Our average interest rates in this country should be about 3.5%. So they have overstimulated, created low interest rates, and overheated the economy in a time when they should be very careful. So now what they're doing is they're, of course, putting us in reverse. They're, in essence, raising interest rates dramatically over a very short period of time, which is really hurting the consumer. So our markets, when I went into this business, we were seeing high interest rates. That was during the Volcker time. And of course, we saw a tremendous upswing in the equity markets as a result of lower interest rates, because when you have lower interest rates, you have better earnings. Now you're going to see, obviously, a hurting on the stock market. And you've already seen that. I mean, the Dow is down about 13%. The S&P is down about 16 to 18%. The NASDAQ is down 24% because it's a much more volatile market, and it gets hurt by higher interest rates easier. So our opinion is you must stay, you must stay with good quality companies. We are a Graham and Dodd organization. We believe in strong revenue, good balance sheets, good dividends, and to stay the course. You've seen in the last 75 years, you have basically seen the S&P go down 9 times between 20 and 40% of the time. In that 20 to 40% of the time, the S&P 500 has rebounded in 18 to 36 months. So your philosophy to stay the course is probably your best in the equity side, unless you need the money. And if you need the money, then you have to look at the monetary stimulus and be conservative. That's our opinion. You pull money out of the equities, you put cash on the sidelines, you maybe go into some municipals, or you go into precious metals to basically protect your assets. So it is about value. Right now, you're seeing a tremendous sell-off in the crypto space. You're seeing that because where is the intrinsic value in cryptos. So you've seen $2 trillion sell off. You want to stay where quality is, where value is. And the Biden economy is very bad for your money.
I think what you're saying is that the basic principles of investing, which is to diversify your investments, look at your horizon. Obviously, if you're on the verge of retirement, you're going to have more immediate cash needs. So probably your risk tolerance is a little bit lower. But if you're a younger person and you're looking at a longer horizon, you don't want to panic and start pulling out because you're going to lose out on the upside. Let me ask you this question. Do you think that if the Republicans take the House and the Senate in November, despite the craziness of the Biden regime, this will reassure the market, stabilize the economy, and at least give us some breathing room going into the 2024 election?
I do. I'm very. I'm hearing that we'll definitely take Congress. Senate is a little bit more tricky. I'm hoping we'll be 3 up in the Senate, and I believe if we get both of the houses, we will stabilize the policies that are basically being pushed through Washington right now.
Kim, let's close out by having you say a word about the Money Show. It's a very active organization. You have an annual conference, you have regional events, you have online events. Say a word about the Money Show and tell people where they can find out more about it.
Well, we are a very unique and dynamic marketplace. We actually have, as you have said, live conferences, but our strongest platform is our virtual conference. Every 2 weeks, we do a virtual conference with economists, market analysts, portfolio managers. And our theory is for you to get your advice from, we have about 1,200 experts on our platform on an annual basis, and we serve 120,000 active investors annually. And we empower investors to, in essence, listen to not necessarily the institutions, but to listen to the people that have skin in the game, the people that actually put their money to work and basically say to the individual investor, this is our macro trend, these are our strategies, and this is how you can benefit from it. So we have actually empowered the self-directed investor for 40 years. So we are very excited about that.
Kim, this is awesome. I'd like to have you back because we are in turbulent times and we need, not on the macro level, but also on the individual level, like what should I do? What should one do in trying to protect our savings in this market? So thanks for joining me. I really appreciate it and look forward to having you back soon.
Thank you so much, Dinesh, and thank you for all that you do. All the best.